Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to the first instalment of our new InvesTips from the CIO's Desk series. I'm Steve Brice, Standard Chartered Bank's Global Chief Investment Officer and the host for this series. My aim is to take you on a financial journey in bites to make your path to financial freedom as simple and easy as it can be. We'll cover different topics along the way. We'll start with the building blocks of what you need to know and what you need to think about as you start on your financial journey. After that, we'll talk about how we should approach investing and ensuring that you avoid potential costly mistakes and stay on track for the long run. For today, I want to focus on the journey that we all need to take as we try to pursue our financial objectives. Now, if you're anything like me, you like having a checklist and then checking things off that list when they're done. Unfortunately, financial planning doesn't really work like this. It's constantly evolving. However, it is important to start on the journey as soon as you possibly can, as this will make your options in the future much more interesting and rewarding. So where do you start? Well, the real starting point is you. We're all unique. We have unique talents, opportunities, ambitions, and yes, fears. These must be factored into any financial plan. Now, in future podcasts, we'll get into each of these in more detail. But for now, let's cover the key steps. The first is to take stock. So this is simply what is your income and what are your expenses? How much, if anything, are you able to save on a monthly basis? Then, if you're like 99% of people, the question will be, how can I save more? What expenses could I reduce without making my life miserable? The key is not to cut spending to the bone, well, at least not forever. Just as in any diet, the key is sustainability. The answer is you need to be deliberate in your spending. So focus on spending on what's really important to you and cutting back elsewhere. Once you get into the saving habit and you've built a nest egg that's equivalent to around 6 months of essential expenses, then you can look at the third stage, which is to look into your insurance needs. Now, this might not sound something that you want to do or is very exciting, because what you really need to do is say, okay, what could possibly go wrong in my life? What are the different bad things that could happen to you? And then consider the consequences of that happening on your well-being to you and those around you. Early in life, these may be limited. For instance, if you lose your job, you may be able to move back in your parents for a while, rent-free. However, once you get a mortgage or have a family, then you get more and more responsibilities, and this is where you may want to consider getting some insurance coverage, whether it be life, employment, or whatever. The fourth stage is making your money work for you. Now, this is my favourite part, as it's when you start to invest. There's no real need actually to overcomplicate things, particularly at the start. Just set aside an amount every month and invest it into a diversified investment, into diversified investments. The key word here is diversified. This should include mutual funds or exchange-traded funds in equities and bonds at the very least. Now, I realise these may not be concepts that you are familiar with, and I will cover that more in upcoming episodes. But the theory is, the more comfortable you are with seeing temporary losses in your portfolio's value, the greater the allocation to equities you can have as you seek higher long-term returns. Now, if in doubt as you're starting out, I would actually suggest you have a relatively small allocation to equities to start with, and then increase it over time as you get more comfortable as an investor. The final stage is to periodically refine both your insurance coverage and your investment plan. Your situation will constantly evolve, as will your current financial situation and, of course, your aspirations. For instance, you may get a promotion, which allows you to save and invest more. This is where the journey part comes in. If you're lucky and have planned well, this can be an enjoyable process, as it encourages you to think about the opportunities in the future with less financial concerns. Now, before we wrap up, there's one last piece of advice I want to give you, and that is not to do this alone. You might think, as I work for a Standard Chartered bank, that I'm about to tell you to get a financial advisor. Now, this may be a good idea for many people, but what I'm talking about here is the need to go on this journey with the significant person in your life. Just bouncing ideas off each other, talking to each other, will likely lead to better and more sustainable outcomes and also help you deal with life's bumps along the way. Well, thank you for joining me today. I hope this whets your appetite for the topics we're going to cover in more detail in the weeks ahead. As always, please feel free to like and follow the podcast channel, and I look forward to speaking to you very soon.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.